The next important thing to think about in S1 is what sustainability-related risks and opportunities an entity is required to provide information about. S1 doesn't ask companies to provide information about every sustainability-related risk and opportunity that might affect its business and prospects. It focuses on those that are reasonably certain to affect a company's cash flows, its access to capital, and its cost of finance, which is described in S1 as an entity's prospects. So it's those important sustainability-related risks and opportunities that really matter for investors that information is provided about. Now clearly, where we have a standard that's been developed by the ISSB, that's the first place to look to identify which sustainability-related risk and opportunity that you might report on. So for example, we have S2, our climate standard. That's an example of a climate-related risk and opportunity that may be important for a company to provide information about. But what does a company do in the absence of a specific standard like S2? S1 tells you what to do. First of all, it says that an entity shall refer to and consider the SASB standards. We also say that a company may consider the CDSB application guidance, industry practice, to look and find sources of inspiration for the types of sustainability-related risks and opportunities that may be necessary to provide information about. Once you've identified what sustainability-related risks and opportunities to report on, S1 then explains what information needs to be provided. Again, if an ISSB standard is in place, such as S2 for climate, an entity would be required to use that. But what do you do in the absence of a specific standard? In that case, S1 says that companies shall refer to and consider the SASB standards to provide specific metrics and information to disclose, and may consider other materials, including the CDSB application guidance, industry practice, these standards set by others who have focused on disclosures about sustainability designed to meet investor needs. And in the case of metrics and information, an entity also, in this case, can consider the materials of the European Sustainability Reporting Standards, ESRS, and the requirements of the Global Reporting Initiative Standards, the GRI standards, to the extent that those disclosures would meet the information needs of investors as set out in S1. So there's a lot of guidance in S1 to guide these disclosures over and above what's set out in S2 for climate. The next question is, when do you have to provide information? For example, do you have to always provide information about every climate metric set out in S2? And the short answer is no. The requirements set out in the standards are not mandatory. All of the disclosures set out in the ISSB standards are subject to materiality. For those of you used to the IFRS accounting standards, you'll recognise the definition of materiality that's used by the ISSB, because we've used the same definition of materiality that the International Accounting Standards Board uses. So information is required to be provided when it's material to investors. So that means that it must be provided when omitting, misstating, or obscuring that information could be reasonably expected to influence an investment decision.